So I recently posted this on my Instagram talking about my current portfolio allocation, and as you guys can see, I've got about 69% in ETFs, 3% in crypto, and about 28% in stocks. Now, for me, this works fine at the moment, but don't just copy me because you're seeing this. This is not financial advice. This is not the optimal portfolio for you. But I got a comment from a follower who said, "Mate, where is the gold?" And look, I basically just answered as truthfully as possible, and I told him that, to be honest, I don't have any gold at all at the moment. I don't really understand gold in the first place, and at the moment I have no real want to invest in something like this. Now, this got me thinking, what are the actual advantages of investing in gold in the first place? Is it actually advantageous, or is it just something that only boomers like to do? Now, after all, this is one of the oldest forms of investment. It's literally thousands of years old. Lots of countries used to be backed by gold, even the US until like 1971. So it's pretty crazy. It's got a pretty long history. So yeah, let's talk about it. Now, before we do, if you're new to the channel, my name is Faizy. This channel is about finance and investing. Before we begin, this video is not financial advice. I'm not a financial advisor. Please do some research on your own too. Let's jump into it. So probably the number one reason why people say to have gold in your portfolio is because it is quite a rare asset. It's a pretty rare metal. An average person can't just go and dig it up in their backyard. You can't just start digging with tools and like a pickaxe and a shovel and actually find gold in your backyard. It is quite rare to come across. It's a very scarce metal, and with things that are usually scarce, they are very hard to come by, and they have natural value. They have exclusivity, like diamonds as well. And even if you do manage to find gold, you're going to find it in quite little concentrations, meaning that you actually have to dig quite a lot to get any significant result, which is why we kind of leave gold mining to, governments and companies to actually do them on our behalf if we want to invest in something like that. Because obviously to mine something like that, you need quite large mines, you need large equipment, and stuff like that is something that the average person is obviously not going to have. And the other reason why it's scarce is because there's only a finite number of gold in the world. As you might already know, gold is a scarce metal, it's a scarce resource, which means that eventually it's going to run out. Now, look, personally, I have no idea when that's going to be. I'm not even going to try and predict something like that. But according to a few sources, as you guys can see right here, gold is expected to run out by 2035 to 2070, right? So it's actually not that far away if you really think about it. It's only, say, 14 years until that's the earliest the prediction is that gold could run out. So we may be seeing gold shortages in our lifetime, who knows? Now, this is the fundamental difference between the currency that we all use, which is the dollar, which is fiat money, versus gold, which is scarce, right? So with the dollar, you can basically print as much as possible. You can, if you need to pay off some debt, you can print more money, as governments have been doing in the past. But with gold, there's only a finite number of gold in the world. You can't just, magically create more gold. You can't just bring it up and just use it to pay off debts. It is very finite. Now, the thing with fiat money is that it used to be backed by gold in the past, but nowadays it is very rare to actually find currencies and governments that are still using gold to back their currencies, which basically means that the money itself is just a piece of plastic. It's just a piece of paper that itself has no value. It just says $20 on it, so we all kind of agree that it's going to have value. The government basically places value onto it and makes it legal tender, which is why we all trust the piece of paper to be worth $20, but inherently the actual piece of paper isn't really worth much. And the other thing with fiat money is that they can just print as much of it as possible, right? So the RBA in Australia or the Fed over in the US can basically print as much as possible to stimulate the economy and to basically encourage spending. And you would have also seen some articles around the American economy where the government or the Fed has basically printed billions and billions of dollars to kind of prop up the economy, and that's basically caused inflation worries as well over in the US and globally. And because of this, it can also spark fears of the actual currency being devalued, because all of a sudden there's more of it, and if we have more of something, it makes it less valuable. But if you look at gold on the other hand, gold doesn't really have issues like that because there's only a finite number of gold around the world. Once again, you can't just magically create gold. It's a very special metal, and that's why it retains its value, unlike the fiat currency, which can be devalued as well. And gold is also looked at as a hedge against inflation, which is why people refer to it as a store of value. Now, what I mean by that is, in the past, if you had cash available and instead of just leaving that money in a savings account, you bought gold with it, your money theoretically would have been preserved until now. And if you still have the gold, if you convert the gold to today's dollars, you would already have the same amount of purchasing power as you did back then all those years ago. Whereas if you just left the money in your bank account, it would be losing money every single year, meaning that that money would be able to buy less things every year until now. And one very simple example of this is, let's say, 30 years ago, back in 1990, you had $10 to your name, and with those $10, you could basically buy, let's say, 10 packs of milk, right? So instead of actually buying those milk packs, you instead decided to spend those $10 to buy just a few grams of gold. Now, fast forward 30 years to 2021, and if you were to convert those gold pieces or those grams of gold back to cash, you would theoretically be able to buy the same amount of milk packs as you did back then. The same amount or more, because the gold has gone up in value and it's basically gone up more than inflation, or basically the same rate as inflation. Whereas again, if you just held cash from 1990 until now, your money would be significantly diminished, your purchasing power would be quite low. Now, of course, this is just a very long-winded way of saying that inflation is basically coming for us all, and we need to protect against it, and we need to invest in assets that actually make our money grow, rather than actually just losing money while it just sits there in the bank. So before we go into a different reason why gold could be worth investing in, if you have found any sort of value so far, please leave a like or subscribe. Once again, it does really help out with the YouTube algorithm. Let's get into it. So gold is actually seen as being uncorrelated with other assets like the stock market. Now, during COVID, as you guys all know, basically 99% of the stocks around the world lost some sort of value during that time. All major global indices fell. So the S&P 500, the FTSE 100, the ASX 200, basically every kind of indice just fell during that time because of all the fears from the uncertainty from the pandemic, COVID, and so on and so on. But gold actually performed pretty decently. Let's have a look. So this graph basically explores the Australian market in much more detail, so we can see that it's measuring it from the absolute highest point, which was 20th of February, to 23rd March, which was the absolute lowest point where everything was. And we can see that Aussie shares and Aussie listed property fell pretty hard. They fell around, say, close to 40%, even above 40% for listed property. But looking at gold actually increased during that time, and we can see that during the highest point, gold was up around 10% almost, which is pretty insane. Now, that's not to say that gold is the safest asset and it did not have any volatility. It obviously had some volatility, as you guys can see in the graph, but the return that you got in just that month alone is pretty good at 10% while everything else was falling. Now look, during that period, if you had gold in your portfolio, chances are your portfolio would be tanking either way overall, because usually you wouldn't have 100% gold, you would have maybe a small allocation towards gold. So overall your portfolio would still be tanking, it would still be pretty scary. However, having gold in your portfolio would make it a bit more easier to digest. It would be easier to kind of bear those insane losses during that time. Your portfolio would be much more cushioned, if that makes sense. It's a much more kind of softer blow, and that's why people say to use gold for diversification, because it can protect you during those volatile periods and those insane crashes like we saw during the coronavirus pandemic. Because generally speaking, gold behaves pretty differently to other assets, which is why people say to have it in your portfolio, because most people would not want to sell their shares at an all-time low. Now you might say to yourself, okay, that's just one crash, right? What about the other crashes? What happens when other historical crashes have happened? How has gold performed during those times? Let's have a look. So in this graph, we can see that the green relates to gold, and the S&P 500 is that big black bar. And we can basically see that in all the major crises that have happened in the last kind of 40 years, gold has done fairly well. We can see that during the dot-com bubble crash, S&P was down negative 50% almost, which is insane. Gold actually did pretty well at about 15%. And then in the GFC, the market fell again by negative 50%, but gold did very, very well, the strongest at about kind of 25%. And the European debt crisis, gold did pretty well. And during the most recent crash during the COVID pandemic, gold once again outperformed the S&P in that short term. So we can generally see by the past crashes that gold performs fairly well during those uncertain times. People tend to trust gold more during those kind of volatility times when things are not looking so good. But once again, as we say with all these finance videos, Past performance does not guarantee future performance. Keep that in mind. Now, with the points mentioned so far, if you're convinced that you want to buy gold, we'll have a look at how to buy it in the first place. But before we do, I just want to bring up one last point. And that point is that gold is still seen as something which is desired, right? If you have a look at kind of gold in popular culture, in just the thought that we have of gold, gold is still seen as something which is quite valuable, right? We have people still giving out, buying gold rings, gold necklaces, and giving gold as a gift. It's seen as a sign of wealth, opulence, and kind of being higher class. We often see those higher end foods where people basically, sprinkle gold on top of food like steaks and stuff like that. So it's pretty insane. And gold still has that culture and perception of being something which only the wealthy can afford. So I do think that the novelty of gold is not going away anytime soon. It is still perceived as being very valuable. Now, as you can see, Gen Z, which is my generation, has a problem with gold. Gen Z seems to have a problem with everything, but as you can see, right, newer generations are not buying gold as much as per this article, but I think that gold is still going to remain quite valuable in the future. So let's talk about how you can actually buy gold in the first place. Now, there's two ways of buying it in my opinion. Firstly, you can just buy the physical gold. So basically just Google, buy gold and whatever your city is. So if you just Google it for Sydney, you can find a couple of shops in the city or, somewhere in Western Sydney where you can actually buy physical gold. Now that's all fine, but the issue that I think with buying gold, physically is the fact that you have to obviously take good care of it. It's a physical kind of asset that you have to protect, which is now prone to, being lost. You could get robbed and those sorts of kind of usual risks. So do keep that in mind. But the other way to invest in gold is through just buying an ETF. Now, I've covered two ETFs on this channel before. One is ASX PM Gold. The other one is ASX Gold. Very simple. So with ASX Gold, basically you get exposure to the underlying gold, and the actual gold that you're buying into is held very securely over in London in the secure vaults of JP Morgan. The management fee for the ETF is 0.4%, so you'll be paying around $40 per $10,000 invested. And if you have a look at the returns for the ETF, you can see that they aren't that bad at all. We can see that since inception, gold has returned 8% per year. The 10-year return is 3%. 5-year is 6.73%. So look, it's not that bad at all. It's actually pretty decent considering that gold is uncorrelated with other markets out there. So it may be good to invest in something like gold. Once again, look, not financial advice. I just thought it was pretty interesting to see such a decent return for gold. Now you can actually buy ASX Gold completely brokerage free using a new broker called Pearler. These guys are also Chess sponsored. Now the normal fees to buy and sell stocks and ETFs for Pearler is a flat $9.50 per trade, but since ASX Gold forms part of their free brokerage ETFs, you can basically buy into this ETF completely brokerage free. You won't pay a single cent as long as you hold it for over a year, and you only pay brokerage of $9.50 as soon as you sell. Now if you do want to check it out, you can use the link right here, which is basically my first name, and you will also be getting a bonus free trade. There's a link in description for you guys to check it out. Go check it out if you're interested. So that was gold, and now after making this video and after doing some research, I can safely say that I somewhat understand how gold works. Personally, I'm still not ready to invest in gold right now, but it was still very good to learn, and I'm so glad that that person commented on my post because it gave me an opportunity to look more into gold and actually understand how it works and not be so, ignorant when it comes to one of the oldest forms of investment. Now, if you want to know more about those two gold-based ETFs in more detail, I've done a video comparing those ETFs. There should be a link right here. This video is the top 5 worst ETFs on the ASX. Now, those two gold ETFs are in this video because gold has done pretty poorly over the past year, so don't mind the title, but do check this video out if you want to learn more about gold. And once again, guys, thank you so much for watching. Please like and subscribe, and I'll see you in the next one. Bye now. Now if you want to know